What if the life you're building isn't increasing your freedom, but quietly reducing it? Everything you've been told about debt sounds reasonable, responsible, strategic, normal. Get a mortgage, build credit, finance the car, use leverage, invest in yourself. But what if debt isn't a side effect of the system? What if it is the system? From housing to transportation to education to lifestyle, modern life runs on borrowed money. And that feels like progress until you ask one uncomfortable question. If debt creates freedom, why does missing one payment feel like panic? Pause there. Economies don't grow because people save. They grow because people spend. And large-scale spending requires one thing: credit. Credit expands purchasing power, but it also expands dependency. Debt pulls tomorrow into today. And that sounds efficient until you realize tomorrow now belongs to someone else. When you take a 30-year mortgage, you're not just buying a house, you're committing 3 decades of future income. When you finance a car, you're not just buying transportation, you're committing future labor. When you swipe a credit card, you're not smoothing cash flow, you're compressing future stability into present comfort. And once tomorrow is committed, your flexibility shrinks, and flexibility is power. Here's where it gets structural. A population with no debt is volatile. It can quit, relocate, experiment, take risks. A population with long-term obligations is predictable. Predictability stabilizes economies. Stable consumption supports corporations. Stable labor supports businesses. Debt quietly creates both. If millions of people have mortgages, how likely are they to leave their jobs impulsively? If large portions of society carry fixed monthly payments, how many can afford uncertainty? The system doesn't need you wealthy, it needs you predictable. That's not conspiracy, that's structural design. Now think psychologically. When you owe nothing, you have optionality. When you owe significantly, you have responsibility. And responsibility reduces risk tolerance. Not because you lack ambition, but because you can't afford instability. Debt doesn't just affect your balance sheet, it reshapes your behavior. A person with no obligations can experiment. A person with heavy obligations must maintain continuity. And when millions must maintain continuity, you get a workforce that values security over ownership, employment over leverage, stability over freedom. That fuels economic growth. But growth of GDP is not the same as growth of independence. Look at housing. We're told home ownership is the ultimate milestone, and it can be powerful. But for decades, most homeowners don't own their homes. The bank does. Miss 3 payments and watch how fast ownership becomes temporary. During those decades, income must remain consistent. Career shifts feel dangerous. Entrepreneurship becomes harder. Geographic movement becomes complicated. Obligation quietly shapes behavior. Now combine that with car loans, student debt, lifestyle inflation, subscription creep. You don't just earn income, you serve commitments. Commitments require continuity. Continuity requires compliance. And compliance reduces negotiation power. Here's the quiet truth. A person who owns scalable assets can walk away from income. A person who owes significant debt cannot. That single difference changes leverage. It changes career decisions. It changes what you tolerate. It changes how boldly you move. Understand this clearly. Debt is not inherently evil. Strategic debt can accelerate growth. Business leverage can build assets. But consumer debt, used primarily to maintain lifestyle, anchors labor to obligation. And when dependency becomes widespread, freedom becomes conditional. Conditional on income, conditional on stability, conditional on staying inside the lane. Now here's the shift. Most people try to increase income to support obligations. Very few reduce obligations to increase optionality. One path increases pressure, the other increases leverage. Real power is not higher monthly earnings, it's lower forced commitments. Real freedom isn't access to credit, it's the ability to pause, to walk away, to choose. The debt system fuels economic stability, but your objective isn't to stabilize the macro system, it's to protect your flexibility within it. So stop asking, how much can I afford each month? Start asking, how much freedom am I trading for this decision? That single question changes behavior. Once you understand the architecture, you stop reacting emotionally to the system. You stop chasing the illusion of progress, and you begin designing insulation from dependence. The system was built for stability. You were not. Build accordingly. If this shifted how you see debt and freedom, subscribe to Economy Without Filters. We don't discuss money emotionally. We dissect the architecture behind it. And once you see the structure, you stop being shaped by it and start positioning beyond it. See you in the next episode.